Good morning, traders. Today is the 22nd of April 2021. My name is Neville Hornsey, market analyst with YouTrading, and today I'm going to be talking about the moves in the dollar CAD and where we might be heading in the near future. Okay, going to the charts. I've got the dollar CAD 15-minute chart here, and if we just quickly look to the left, we can see that the dollar CAD sentiment indicator on the active trader platform shows that 85% of retail traders are bullish and 15% are bearish. And then if we look to the right of the chart, we can see that we basically dropped nearly 200 pips yesterday on the back of some fundamental news. And if we pan out a little bit, we can see that the range itself has taken the liquidity from the upside of the 13th of April and then all the way back down to the 19th of April. And then we've started accepting prices back inside of this range between 1.247 to 1.248 all the way up to 1.2625. The move yesterday was obviously quite dramatic. An hour of complete selling until they found this sort of demand level down here. And as the Europe and London session starts, we're seeing that this might roll over a little bit further. Now, what would cause a move like that? Okay, so in the oil markets, we've got news around the Iran nuclear deal. They're trying to get that going again. And then the US sanctions relief on oil may be happening. President Biden has signaled that he's willing to consider that. Also in the oil markets, they had the US House Judiciary opening a bill around OPEC Plus about antitrust and to do with their cuts and their threatening lawsuits, though I'm not sure how much that's going to affect the price of oil really. We've also had a slightly unexpected build in inventories of crude, so that would be bearish, the crude complex, though we did have a draw on the Cushing and distillates, and a slight build in gasoline. However, this big sort of set of candles to the downside was on the back of the Bank of Canada Governor Macklem, saying that the performance of the economy has increased confidence in the underlying strength. Now, the Canadian economy is greatly reliant on things like oil, so we should look at the oil. And obviously the dollar is the other side of this Canadian move here. So we'll start with oil, looking at the daily. I've essentially marked up a head and shoulders pattern at around this sort of $63 per barrel area. We have the left shoulder, head, right shoulder. And the reason I've done that is because we've actually got a swing high, a lower swing low, and then potentially a lower swing high. So this could actually be a bearish pattern to the downside. However, we need to get through this support just above $59. We've obviously tried once before, and then they brought it back up. Then it consolidated into this sort of area of balance. The reason why I say it's potentially head and shoulders because I would not want to be shorting at the moment. This area of balance here through the sort of back end of March through to the sort of beginning of April was heavily traded, and there's a lot of volume in there. So to take a short into that is going to be met by some sort of support, and then if there's demand for oil as we get into the driving season, then we should expect to see these swing highs get taken out. But I wanted to highlight the potential head and shoulders pattern because if retail traders are looking at that and then start moving to the sort of downside on their sort of sentiment, then that's the play that they'll be looking for. And I believe that if oil is to carry on in this sort of trend higher, that these swing highs will be taken out eventually. But obviously we're going to wait to see if price can get through this little consolidation area, and if we see a bullish spike to the upside, the signal will probably come at the sort of break of 64.5. So that's oil. And then if we go to the dollar, The dollar is showing a bearish trend on the daily. We've got the 200 EMA here. That kind of, it didn't cap prices, but it was obviously a trigger to the downside. You know, once we close back below it, we're also below the 50 period moving average, and again, prices broke through, tested it, and then fell back down. Mentioned before that I'm keeping my eye on this little consolidation here. This little balance here is proven to be support. So $91 is currently support. So for this sort of trend to sort of change from being bearish, obviously once the 50 gets above the 200, that would be a great signal. But realistically, the break of this swing low here, which was 18th of March swing low, that was heavily traded below then, and we've accepted below. So we're going to need to see now a swing high get formed, and then another swing low but be higher, and then another swing high to attack this recent 31st of March swing high. So until we actually start seeing some market structure to the upside, I'm not going to trust this little area here. We have got this rising trend line. So if you take it through the closes, we're just above it. And if you were to take the sort of full extreme of the price action, then we've got a little bit lower to go before we've made the third test of a trend line. So I think there is support here. However, the dollar itself is in a multi-decade downtrend. This balance area here sort of shows that that was really tricky to get through. We only basically made it to the sort of the middle of that range, and I'll be looking for a break lower eventually of these trend lines, and then maybe we'll get the retest before the continuation lower. So yeah, I'm not going to go long here until I see market structure prove to me that it wants to go long, and I'm not going to go short because of, like I said, this support. So I'm looking to see if we get a breakdown, retest, and continuation to the low, which means that the dollar CAD would also go lower. And if we look at the price action here, well, let's start with the 200-day moving average, this blue moving average. There's a lot of room between where we are now and that. So yes, it could be tested, as it does. It does like to check in on the 200 period moving average, but this, at the moment we've got a swing low, a lower swing low, and then a lower swing high. However, yesterday's price action did take out the 30th of March swing high, but only just. It just swept the highs and then came back down to sort of be in this little supply zone, demand zone here. So we can, I would imagine we're going to go low, take out yesterday's low. I won't be shorting yesterday's low. I'll be looking to see if this sort of 1.24 to 1.245 area holds, and then maybe next week, if that does hold, we'll start to see if we can find some sort of intraday sort of price action to see if we can again test what is now essentially a double top up here, because that move yesterday was insane to the downside. There'll be a lot, if prices do start going up, there's nothing here really until 1.258. That is market structure. So I can imagine we test that, and like I said, a little bit higher. But yeah, I want to see if this little demand zone here holds. Otherwise, I just assume that we're going lower as the Canadian economy grows along with the price of oil. So we're in wait and see mode, but at the moment, I think the trends continue. So oil will probably go higher. The dollar index is probably going to go lower. And therefore, I think this dollar CAD eventually goes lower. But I just wanted to explain some of the key things to look out for, and yeah, just be careful if you are thinking of shorting, because there is some support coming in for the dollar CAD just around here. Okay, I hope that was useful and interesting, and I'll catch up with you tomorrow.